That's a great question. I think, like a little bit of things, there's a range of, views and viewpoints. But I think overall, I think they agree that we were supposed to go after Iran. We may have been a bit premature and taken too much, confidence that we could pull a Venezuela type thing, which may have led to these issues. And maybe there wasn't quite enough planning what this should look like. There was not enough preparation with NATO and some of our allies. There probably was not, clearly not done enough to sell the American people on this. But I think we're at a stage right now where, as a whole, they believe that we probably have to see this through and finish it properly, that we don't want to leave Iran with nuclear capability.
Interview after interview, Paul. We thought Paul Sankey yesterday was just outstanding as well. Energy. We have hydrocarbon pros, including Javier Blas of Bloomberg, saying, watch the dated price and prices are going up. Are you doing investment strategy assuming 120 Brent, 130 Brent, 140 Brent?
And, I think we're following some of your clues. We're looking at October and November contracts, and now I think WTI is at 80 in November, right? That's the first time that's happened. It's at the highest. So this is starting to, pull out. And I would say we are spending much more time when we're having discussions. Diesel, LNG. LNG is always tighter, diesel. And we think the affordability is just starting. And yes, gasoline's important. The diesel's more important. It's going to start hitting food. I think Europe, Tesco already said food prices are going higher just because of diesel. And when you get the cost of it, fertilizer and et cetera that's gone through, I think you're going to see this affordability issue. And it's going to hit the U.S. too. It's not just a European problem. And that to me is my fear.
Academy Securities has, as Tom was mentioning, the heritage of some of the senior leadership of your firm. Coming from the U.S. military, from the military academies. What is when you talk to your experts at your firm, what is a reasonable conclusion to this effort in Iran, and how does that inform kind of how you think about financial markets?
So our premise is that the IRGC is unwilling to let go. They are not going to let go. They're going to fight tooth and nail. The IRGC, to a large degree, has no alternative, right? If they lose, Iranian people will kill them, right? They have been committing murder on a wholesale level domestically. And we think of them probably more almost like feudal lords. So they become very rich and wealthy. Their families tend to intermarriage. So they are a connected elite oligarch who wants to keep this and have the military capacity to do that. So I think we are going to have to dislodge them. And that's why I think we believe there's going to have to be one more serious round of attacks to push this forward.
And Paul, Mark Champion yesterday, I asked him, is it 3 parties? He said, hell no, it's 5. 5 different parts of the Iranian elite are involved here. And he said 2 of them, we don't even know who they are.
Yep, exactly. So, Peter, so it looks like, I'm just looking at the markets here, we had that 10% sell-off when the war started. An equally rapid rebound in the marketplace, hitting all-time highs here. What are your discussions with your clients here about equity outlook here?
The semis has just been an insanely great story. We've had this production for security. We've liked Intel as part of that production for security.
You were on board Intel.
We've been like that for about a year and a half. It's been our favorite stock for a while. As part of this building production for security, I think now what we're supposed to do is look to Europe. I think Europe, BP, Shell, Total, could do very well. Nokia, Ericsson. I think Europe is finally getting the joke that they have to vertically integrate themselves a little bit to protect themselves. Not because they're being mean, not because they're not worried about the climate, but the reality is you need to fix things today so that you are more sustainable and resilient.
Academy Securities has been doing this since just after World War I. You've been doing it since the Korean War. I mean, on an earnings basis, Peter Tchir, is this as good as it gets? I've never seen what Julian Emmanuel, Jonathan Golub, and others are summarizing 21% of earnings and in that. You're telling me to go long as good as it gets?
No, I think you want to take some profits here. I think we are underpricing some of the risks. Again, the semiconductor is its own story. Away from that, affordability for the consumer. What's going on there? Do we have issues? And again, I think valuations are once again become a little bit more attractive in Europe because people are more concerned that Europe has more exposure to the war, which is correct. But I think their ability to kind of go for this production for security, and within the U.S., we've had a little bit of a bounce in some of the rare earths and commodities. I think that gets attention again, right? If we are going to build missiles, so the THAAD missile, which we, I think, made 50 of last year, we're supposed to try and make 1,000 of next year. They include a lot of germanium and gallium, 2 rare earths that we mostly get from China. I think you're going to see this administration continue to focus on building out our own rare earths critical minerals. So I love that as a trade, and that's where I want to be in the U.S. a little bit.